IFRIS, who is that? No, IFRIS. IFRIS is an abbreviation. It stands for the Electronic Fiscal Receipting and Invoicing Solution. So in order to make this presentation practical, I would like everybody to type just the kind of business you're in so that I can make this as interactive as possible. So just in one word, if you're into transport, whatever it is you're into, just kindly put that in the chat. And then if you have any question, kindly type that as well. We'll leave some minutes towards the end of the call to answer those questions, because at the end of the day, this needs to be relevant to you. So let me share. Okay, I see Dennis, software development. Thank you. Okay, so because you've given me software development, I'm going to use that as an example. Now, IFRIS, like I've said, IFRIS is an abbreviation for Electronic Fiscal Receipting and Invoicing Solution. So what happens is it's a business solution used by government to manage issuing e-receipts and invoices. Now, in any business that you're in, I'm sure you have a customer. Am I right? So when the customer, when you make a supply, you give them an invoice so that they can pay you. So this is the point at which you are supposed to use the electronic invoices. Now it's doing away with the physical invoices because those ones were being abused. People would go to NASA Road, just begin making those. And government say, no, look here, no, you have to be smarter. Now, I've mentioned that. Now, I'm sure you're wondering, what exactly does it mean for me as a business owner? Yes, IFRIS has come, I've heard about it, but what does it mean? So first of all, you need to know that anybody with a TIN number can have an IFRIS account. I repeat, anybody with a TIN number can have an IFRIS account, whether or not they are on the VAT register. Now, I will talk more about VAT a little later. Now, what that means is that you, through your TIN number, you log in, create an account on the IFRIS platform, and then you can begin to issue e-receipts, invoices. So it's something that's being phased, it's something that's being implemented in phases. And as you know, change management, I'm sure you, as business people, sometimes you come up with things and your employees are taking time to pick it up. So in the same way, URA is implementing, it began implementing, but people have been picking it up slowly. They've been giving information to make sure everybody's on board. Because at the end of the day, it benefits, yes, it benefits them to be able to know how you're performing as a business. Now, what this means, if you're on the VAT register, it means that some of you actually are going to notice, I don't know if you've noticed, clients will come to you and say, I want you to supply me this, but I need an e-receipt, I need an invoice. So if you face that, that means that individual is trying to do what we call claiming input. It works like this. As a business, you make sales, yes? You make sales, you make deliveries, whatever it is you do. Like software development, let's say, Dennis, like said, software, you're contacted by Ronald, he needs a website to help manage his shop. I mean, to help get clients for his shop. So Ronald is actually on the VAT register. Let's imagine Ronald would like to claim that purchase, to claim the VAT on the purchase when he makes an order from you. So Dennis, you go ahead and you design the website for him and you give him the invoice or whichever goes before. And then when you give him the invoice, that invoice, if he asks you for, if you are on the VAT register, that invoice will come with the 18%. You're supposed to have the 18%. So if you can pay attention, can everybody see my screen? Ahawe, can you see my screen?
Yes, we can.
Oh, perfect. So on the left, you can see e-receipt. Then on the other side, invoice. I want to direct you to this top heading. So this, the one on the left, the one with the e-receipt, this is somebody who is not on the VAT register. What that means by VAT register is they are not allowed to charge 18% on top of their price. They are not on the VAT register. Now, whenever they issue, it comes out as an e-receipt and direct you to the top line. Then, if you're on the VAT register, it comes out as an invoice or / tax invoice, as you can see. So let's look down. As you can see, BRN stands for business registration number. Then the TIN, I've had to cover these up because these are for clients. Then you have the legal name, that's the name of the company, maybe Ronald Enterprises Limited, trade name, seller's reference down here. You have the date, device number, fiscal document number. Then down you have the TIN of the individual, of the client, the person who has asked you for the service or the product. So here you have, for example, as you can see, said you're into website development. As you can see, this one is for a client. There is website, web design and programming, quantity 1. How his person charges user access per day. And the price is 3 million shillings. As you can see, his price 3 million shillings is actually the total on gross amount down here. Now, if you turn to the right, the one on the right, you would see it has the similar details, but this one in particular is this is a small bar. The bar is not small, but they do have some kind of they are on the register. So as you can see here, there's a Pepsi, 4 Pepsis, each at 2,000, 8,000 Guinness, 2, each 5,000 shillings, 10,000. So now if you can see the total is 18,000 shillings. So the person, the bartender, is receiving 18,000 shillings. But because you're on the VAT register, not all that money is yours. 2,700 shillings belongs to the government. Then this is VAT. And then you have the net amount, 15. So 15,000 is yours, 2,000 is for the government, and 18,000, that's the total money you have received. So basically, as a business owner, you need to know, do I qualify to be on the VAT register? That's the first question. And what does it take to be on the VAT register? One, URA looks at the turnover. By the way, something you should know is that URA can never know your business better than you. It actually relies on the information you give it to be able to either assess or even to know how to proceed with you. So URA relies totally on the information that you provide, apart from third-party information. Let me give you an example. I got a client, I think they had an assessment. They had been assessed for under declaring. So when I checked, I found that the individual who filed the return, the final return, was not aware of the transactions they were making. I think they were trying to make the person pay less tax. So what happens is the person, unfortunately or fortunately, well, unfortunately for them, but fortunately for URA, they had supplied an individual who withheld taxes from them. So URA had that third-party information. So when they began to look at the filings, the VAT filings within the month, and then they looked at the final return, the amounts, they were not tallying. So therefore they were assessed. So what this means is that if you are an individual, let's imagine, can I have another example of a business? Let me see, another example of a business. So, okay, Nicholas, okay, fine. I see this one. Nicholas, well, I know this one. So this is, let's say this one is doing what? This one sells property. Okay. Property. I happen to know this individual. So you sell property. So you say, I sold property worth maybe 50 million shillings, but the person you're selling to the person you're selling to will need to have the e-receipt and the invoice. So what happens is, if you're not on the register, you will lose out on that business because you did not give them an e-receipt or an invoice. So I want to continue with the implications. We are going through the implications of IFRIS here as a business owner. So you're forced to purchase from companies which have e-receipts or invoices. I'm sure some of you have faced that. Some people will actually walk away because you don't give them. And the reason they walk away is because the money they have spent in your business, they cannot claim it in their return. Then you're forced to, when you get onto the register, you have to file returns every month. And briefly, I'll skip this. To be on the register, you need to look at the amount of money you make. If you look at the sales you've made in the whole year and they reach 150 million shillings, you are supposed to be on the register. And I repeat, if you make sales that exceed 150 million shillings and above, you're supposed to be on the VAT register. If in the past 3 months you have made sales or supplies, and these supplies are total to about 37.5 million, you are also supposed to get onto the register. How do you get on the register? You get onto the register by applying. You make an amendment to your TIN registration details and you get onto the register. Now, please note, it is a free service. I know people charge. Maybe I shouldn't tell you this, but well, it's actually a free service. You're supposed to be able to amend the details yourself, and then a notification comes, and then you follow it up, and you are put on the register. Usually they come and visit your premises. They want proof that you actually earn that kind of money. When they have that proof, they need to know, do you have an office? They may look at maybe the payments, water bills, maybe rent payments. And then they look at your sales. Do you reach that threshold? And then you are put on the register. Now, when you put on the register, that's when the receipts you issue, you'll be able to issue these what we call e-invoices, which have VAT component on them. Now, in future, please note, in future, URA is planning that because you've been issuing your sales are being issued with time, we'll be having what we call pre-filled returns, because where they have your sales, then they have your purchases. So in future, it will make your work easier, because I know some people forget, some people do not file, some people have that as an issue. Now, then also there's a scenario where people are always claiming, some people, as a way to pay less tax, you go ahead and put in, so I sold 100 million shillings, but I spent 120 million shillings, therefore I pay less tax. So in future, you will be asked to prove that you actually spent that money. How? They ask you for the e-receipts. So please note, it's something that's being implemented. They may not have come, but they will come with time. Enforcement is going on because, like I said, Tax Procedure Code Act empowers the commissioner to enforce that. So just quickly, I think we've gone through this. Something I should mention, for people who are on, okay, I see some people doing agro-processing, okay, real estate, good, manufacturing, wonderful. So now, just really quickly, I want to make something very important because it's pertinent to this time. If you know that your sales exceed, they are 2 billion and above, that means you make roughly 167 million a month. You are supposed to do what we call system-to-system integration. So what that means is, just like you've seen how you go to supermarket, and when you make a sale, it automatically comes out that you get your receipt. So what happens is that if it's compulsory, and there was actually a gazette, and they give a grace period, a gazette and a public notice. The grace period is ending end of June. So please, 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 if you're here, you have your business, you know that you are within 2 billion sales. Yeah, I'm not saying profit, I'm saying sales. Please, please begin the process of system integration. And even if you say you don't have that, you're not yet having that volume of money, trading coming in, but in your business, you have over 100 transactions. 100 transactions. That means, I'll give you an example of a supermarket. Someone comes and buys sugar, another one goes soap, another one a broom, etc, etc. So now those are over 100 transactions. You are supposed, please, I repeat this, I wouldn't want anyone here to be on the wrong side, and they're going to be they're going to start being difficult, being tough, because the grace period ends end of June. I have a friend there who told me they have a special unit going to be enforcing that one. So please, yeah. And what happens is system integration. What you need to do is URA has got what we call certified people who can do it for you. So it's a matter of contacting them, and then you negotiate with them how much it's going to cost, depending on your business, because businesses are different. So if you so I cannot give you an exact figure, because that's something you negotiate with the supplier, the person who has been allowed by URA to do this. Let me continue. So quickly, I saw on the call, I saw we had, okay, just a second. So I would like to get into a practical session, because this is very practical. I wouldn't want it to be theoretical. And let me check if I have any questions yet. Why should an official from government talk about TIN number? TIN stands for tax application number, so one cannot have TIN number. That's correct information. Okay, Christina. Okay. Okay, I think let me take questions at the end. So please type your questions. Feel free to type your questions so that I'll just get into them. So tax identification number, yes, every individual is supposed to have, as long as you're earning, just to answer Christina quickly, as long as you're earning, you are supposed to have a TIN number, whether it's through a salary, a business, you are supposed to have a TIN number. Yes, and you're also supposed to file a return. Doesn't matter that you're an employee, you still have to file at the end of the year, that is. But the monthly is filed for you by the employer. Oh, no, let's continue. So I would like to go online, and let's make this practical. I would like to make this practical. So let me just share my screen again. Go online. Just let me go to my browser. Go to my browser. My browser. Okay. Can everybody see my browser? James, tell me, can you see my browser?
Yes, we can see it.
Perfect, perfect. So now, okay, I think let me start from the URA website so that it's more practical. So this is the URA website. And since this is an Ifris training, our interest is right here. You see, this is the invoicing tab. So you just click this invoicing tab to get to the Ifris portal. So it opens up like this. This is the Ifris portal. Earlier, I spoke about getting suppliers for integration of your business software, and this is the link where you get them, software integrators. Anyway, so logging into your TIN, your Ifris platform, is the same as you would log into your TIN. So just that this is now for receiving invoicing. So now here we are. Let's type in the TIN. You type your TIN here, and then your password. Your password you normally use to access your account. After you type that, you log in. You log in. Now, when you log in, there's a second level of security called OTP. OTP, this is a password that comes, it's a one-time password. It's given to you to use, be able to access. So it comes to either your email or your phone. Although URA system is sometimes slow, I even have a client who right now is having challenges. They're unable to get an OTP, but usually that's from the IT side. So in case you have issues with that, you call customer care and make sure you put them on pressure because they're there to serve you. So let me just put this OTP in really quickly. So OTP is a password. It comes to your phone. And when it comes to your phone, type it in. We just check the one which has come. Just a second. Okay, here we are. Password, OTP. Wonderful. Got it. So then you are in, you have logged in. Now, this is how your platform looks. The new IFRIS platform looks.
The screen we seem to see is, I think our screen is frozen a bit. It's showing you are redirected. I don't know whether you can reproject the screen.
I share again.
To see what, so that we see what you're seeing.
Okay. That. Is it better? Can you see it now?
First unshare and then share again, and then we see.
Okay.
And now we try to share again.
So
I think the word we see is, okay, now we can see the URA screen.
okay, perfect. So let me continue. So let's take this again. You click invoicing. Oh, well, we had already been logged in. So now this is your dashboard. You can look around this dashboard. Home, performance, user guides, frequency, expression, policy, invoicing. When you are first time, when it's your first time here, you need to come to registration, and then you click first time registration. Now, because this individual is already registered, so I'll not get into that. We have, as a business owner, one of the things you need to know is that, first of all, there are two categories of businesses. One, we have service businesses, and the other is the product business. So what happens is,
I think what we see is just a blank screen. Okay. So it may be that you can't share it on, that could be the case.
Wow.
Okay. We can see the URA screen, but this one is blank. So it may be something in the programming. So you possibly will have to talk us through using the slides.
Okay. Okay, let me do this. Okay, let's go to the slide there. So in brief, really, when you think about Ifris as a platform, the main aspect you need to know about it is that Ifris allows you to issue e-receipts and e-invoices. Now, before you can issue those e-receipts and those invoices, you would need to, let's stop the share. Go back to the slide. So can you see the slides now?
Can see the slides now.
Okay. So with Ifris, like I mentioned, URA cannot know your business better than you. It's you who knows your business. So you are the one to do what you call configuring the products and services. Each product, URA has a list of different products. Please note that not all products have VAT component on them. Some are exempt, some are zero rated. So what happens is each URA has a database of all the products, most of them that you are probably going to be selling. So what happens is the first thing you need to do is to configure your goods and services. So it's really disappointing. I wanted to show this to you practically, but I think we've known how to log in. And then we have a tab for the stock management. So stock management, let me just try something else here. Run up.
Yes, Fortune.
So you said when I went to the portal, everything, like you couldn't see
I don't
what the screen was showing.
My impression is that you can't project it on another screen. That's that would be it, because we only see the URA screen, but we can't see when you enter into someone's account. So possibly, I think you can just use the slides and you talk us through. We may have to see how to kind of implement a practical session.
Yeah, we'll need a practical session, definitely. Okay, so anyway, so within the portal, there's a tab. There's a tab with different items. One of them happens to be called stock management. Now, stock management is where you get to be able to stock, to put in the stock that you have bought. But before you can put in that stock, you need to do what we call configuring. Now, configuring means you get in onto that database and pick an item. Let's say he said he does website development. So once you pick through those goods and services and you browse, what you call browsing a product, you select website development. Now, when you select website development, it brings that up and tells you whether or not it has VAT component or not. If you're selling maybe fresh eucalyptus poles, you'd find they do not have VAT component. But you would find another one which has treated eucalyptus poles, which has VAT component. Something I hadn't mentioned is that VAT is value added tax. It is charged on the value you add to an item. So if you just cut down a tree and went to sell it, no value added, no VAT. But if you're selling a treated pole, that one you've added value. So therefore there is a VAT component. So when you go as a business owner into your account and you are configuring it, once you pick the product, it will tell you whether or not it has VAT component. And then you can configure and then you submit. Configuring just means you pick the product and say, I sell eucalyptus poles. After you sell eucalyptus poles, then you put in the price at which you sell your eucalyptus poles, and then you submit. So once you submit, that information is recorded. Now, after you have submitted your your particular code, your particular product. For example, that example I gave you was for a service, that is website development. But you might be trading, you may have a wholesale, maybe you're trading sodas, beers, whatever it is. Now for these ones, you need to do what we call stocking in. Just like you have a shop, you cannot just start selling what you don't have. So the system requires you to first tell it that I have purchased this. And then once you've purchased it and you've stocked it in, then you are able to be able to issue it out in a sale. So please note, if you have just you have not stocked in your product, you cannot sell it out. I repeat that. If you have not stocked in a product, you cannot sell it out. So under the same tab, stock management, you look for stock, it's called to stock in management, and then you stock. Actually, what I can do, Ronald, what I can do, let me go to the website and I get screenshots. I think that would be better. But briefly, let me wind up with this, then I go there. So you need to stock in the type of goods. And at that point, you need to tell them, is it opening stock? Is it a local purchase? Have you imported or not? And then you put in the supplier name, the details. Then you'll be able to pick the other product which you configured, and then you can confirm. And then that's when you are allowed to actually go ahead and issue, that is to make a sale. Please note, if you are one of those people I mentioned, where your system has been connected to using what you call system integration, you do not need to do all this. You just need to stock in, and then you just, for example, when it comes to issuing, because people are buying all the time, once your point of sale shows that you've sold sugar, salt, it automatically uploads into the system. So, okay, I see questions about service providers. Okay, thank you for the question, Alexandria. Okay.
I think what we could do is possibly if you wrap this up, then we can do a Q&A, and then we can be able to also see a couple of screens here.
Yeah, I agree. Yeah, so basically, once you have configured your items, you can go ahead and issue them. Somebody has come to you. I see somebody saying here you need to travel. Let's imagine you are doing ticketing for Enterprise Uganda, and Enterprise Uganda needs you to get them a number of tickets. So what happens is, since it's a service, you don't need to stock in. You just go ahead, once you have configured that I do ticketing services, you just go ahead and type in a TIN number of Enterprise Uganda, and then you issue them an invoice and an e-receipt. That's if you're not on the VAT register. So the other thing you should know about IFRIS, as a business owner, it helps you, it has that component of accounting, because you have what you call reports. It has reports. So with these reports, you can see, what have I sold so far? Let's imagine you have your business, your app country, you can log into your IFRIS, your business is in Kampala, you log in and see what are the employees doing, what have they issued, what have they sold so far, what have they purchased so far. So you can be able to see what's happening. It also helps you as a business owner to track what's going on in your business. Secondly, you can also, for example, what I do for my clients, I usually give a check probably towards the end, maybe 10 days to, I say, look, based on how we buying and purchasing, prepare this amount of money to pay as VAT. You can always do a prediction looking at your sales, but this is done at the end of the month, then you file, before you file the return. So with that said, I think we could get into the Q&A, because I feel like that would be more relevant.
All right. Thanks a lot, Fortune, for those submissions. There are a couple of questions coming through in the chat box. and we'll address those first. I see a hand from Dennis. I'm going to ask Derek, you can possibly give Dennis an opportunity to speak in a moment. Fortune, thanks for the submission. I think what comes out clearly is that this debate of IFRIS is a wide one. We possibly need to go through a practical session to fully appreciate it. And this is possibly building on our earlier conversations on tax, which clearly showed that there is still a lot more work to do on understanding tax as entrepreneurs. I think there are a couple of questions in the chat box, and then I'll give Dennis an opportunity. One of the questions which came up is, to be on IFRIS, do you have to be VAT registered, or someone who is not VAT registered, what you'd call a small business, can it also be on IFRIS, and how does it use it? So you will pick up that question and respond to it. There was a question from, I think, Madam Christina Kadama was making the case that most of us say TIN number, yet the word number is already in it. I think TIN is tax identification number. So if you say TIN number, you are saying tax identification number. So that's the point she was making. Thanks, Madam Kadama, for that. It's a common mistake, I think, which many people make. There are questions here which come. Yoram says, I am not VAT, but an IFRIS registered. How can I register, and what are the implications to my business? Secondly, in shoe manufacturing, I use several components and accessories from different suppliers who are not even registered with URA. That means import things from other people, and they are sole suppliers. How do I configure that them when they are not TIN? So I have suppliers who are not TIN registered. Those are two questions which come from Yoram. Yoram is into shoemaking. There were questions from Alexandria. I would like to know about the service providers and how we are going to use IFRIS. Also, travel industry is having issues with clients. So shed light on that, please, how we engage as the travel industry. Dennis, I'll give you a chance now to come on and ask your question. I want to apologize. Given the trouble which we had earlier, Dennis, I've asked you to unmute, so I hope you can speak now.
Yeah, thanks. And thanks for the presentation. Indeed, IFRIS and invoicing and whatever URA calls it, I think it's a game change in the way we do business. Of course, it is for tax compliance purposes, but again, I think there's need for more awareness. And thanks to Enterprise for this kind of engagement to make us aware. But there's a general sentiment around IFRIS and most so the system-to-system integration. It is being construed as a mechanism that URA has put in place to ensure that it snoops on whatever a business, and to throw more light about this, whether it's a misconception or it is the truth from a practical perspective. Thank you.
Thank you. I didn't get the last words. I didn't get the last words.
Yeah,
it snoops. I think from that point you broke off a minute.
Yeah, it is being IFRIS, most of the system-to-system integration. It is being seen as a snooping tool from the URA side, like spying on whatever you are doing as far as your accounting and tax management is concerned. So I just wanted you to throw more light whether this is a misconception or that's the way we are going to be dealing in as whatever I'm doing from my business, whatever I'm doing as far as tax and accounting is concerned, URA is going to have a leave or a no on whatever I'm doing.
All right. Thank you, Dennis, for that submission. I think, Fortune, you can quickly answer those questions and then we could take another round.
Okay, perfect. Let me go to Yes, the first one was about, as a small business, can I use IFRIS? The answer is yes. If you look, just that the only difference is that when you charge, when you make a price, you're not allowed to add 18% component. What VAT means is that, what we need to understand about VAT is that that tax is paid, is supposed to be paid by the final consumer. If you go and buy a bottle of soda at 2,000 shillings, that 2,000 shillings as a final consumer, there is VAT on it. But the person the business is not the one, the business who bought it from Coca-Cola and sold it to you is just supposed to transfer that VAT to you if they are on the VAT register. Now, when you are a small business, you are not yet on the VAT register. That means you earn less than, sorry, your turnover is less than 150 million. So yes, you can issue an e-receipt, not an e-invoice. I repeat, you can issue an e-receipt, but not an e-invoice. You put the price as you charge it at your business. Do not add the VAT component. Only those who have been put on the register are allowed to charge the VAT component. That means they are allowed to transfer the VAT to the final consumer. Yeah, I think I get your question. So yes, you can issue an e-receipt. You just go to your TIN and register.
So the invoices are only issued by people who are VAT registered.
Yes. The people who are not VAT registered, it comes out as an e-receipt. I could show it to you on the slide just to, I think I can show it to you on the slide just to be more practical. Can you see my slides?
Yes, we can.
Now, I picked out an example for you here. So now, do you see, I want you to look at the top of these two. One of them has on it e-receipt, and the other has e-invoice / tax invoice. Can we see that?
Yes, we can.
Perfect. So the one on the left with e-receipt, this person is not on the VAT register, but they went ahead to give an e-receipt to their client because the client asked. Are we together? So it comes out as an e-receipt. And notice down on the price, he put website development and he charges 3 million. When you look down at the gross amount, it's the 3 million the client is supposed to pay. Are we together? But on the right, the person who on the VAT register, when you look at the amount, it is he charged the sales he made were worth 18,000 shillings. But of that 18,000 shillings, 2,000 shillings is VAT. So the onus is on you, the person who is on the register, to add 18% to your price. But simply, the question was, if I am not on the register, can I use IFRIS? The answer is yes. The difference is it will come out as an e-receipt. I think I've answered that.
All right,
Ronald?
thank you. Yeah, yes, please,
so
you can proceed.
The next question was, okay, how do I register on VAT? So registering on VAT, and actually, by the way, I thank Enterprise Uganda for creating this platform, because I've had people come and ask me, say, I want to register on the platform. I say yes. And then they'll go ahead to tell you how someone charged them 1.5 million shillings, 2 million shillings. And really, you see somebody is just paying for ignorance, because it's just something you do on your platform. You go to registration. That's in once you log in, you go into registration, and then you make what you call an amendment. That is, you try to amend and say you want to add VAT component into your registration. And then what happens is, once you're done, a notification comes to you. Then it is sent to an officer within URA. Then after that, they come and visit your premises to see whether or not you actually make the 150 million. So you would have to prove to them that you actually make the 150 million. a year. So you need to show them some sales, maybe. Then you need to prove that you have an office. So you show them your water bills or your rent payment. And then you need to also have, so they will look at that. And then once you pass that test, they approve and you get onto the VAT register. Please note that getting on the VAT register has implications. Number one, at the end of every month, you are supposed to file what we call a VAT return, VAT return. Within that return, you place your sales. You say, I made these sales. And then you get your purchases. You say, I made these purchases. Please note that with introduction of IFRIS, only and only those sales which were made through, those purchases which were made through when you went to buy a product. Let's say you say you make shoes, right? So you make shoes and you bought leather from someone down there in someone maybe had their tires. You bought. So that person has not given you an receipt or an invoice. You cannot claim that input. That's where this IFRIS system becomes very uncomfortable, because you find yourself as an entrepreneur, you're buying at the best price because you want to make money. You're buying from someone who is not on, cannot give you an e-receipt, and then you need to sell to someone who needs the e-receipt. So the challenge is you cannot claim, but within the portal, I have seen that you can be allowed to stock in, that is to be able to make a sale, but you cannot, that input at the end of the month cannot be accepted. What I mean by input is whenever you make a purchase, it is called, you are paying VAT, it's called an input. Whenever you make a sale, it's called an output. So like I said, the implication is at the end of the month, you're paying, you're filing a VAT return. So in that return, you're getting, I sold this, maybe 10 million. I purchased things worth 80 million. Then you file the return. Then what happens is the difference between the 80 and the 10, that is in terms of, I'm not saying the actual amount 10 million, I mean the 18%. Because when you sell things worth 100 million, it means that you have charged 18 million shillings, that is 18%. So meaning, even though you have 100 million with you, 18 million is not yours. You charged VAT 18%. Now, on the other hand, you made purchases to be able to make these sales. So the purchases you made, let's say you made purchases worth maybe 80 million shillings, right? So now this 80 million shillings, the purchases that you made, it means that of that 80 million, 14.4 million is VAT. That means when you are buying your raw materials and you spent 80 million shillings, 14 million shillings of what you spent was actually VAT. So you have paid taxes already. So you have already paid taxes of 14 million shillings. You have made sales of 100 million shillings, of which 18 million shillings is VAT that you have charged. You have made purchases of 80 million shillings. Of that 80 million shillings, 14 million shillings you have paid tax by buying from someone who charged you VAT. So what happens is at the end of the month, when you file your return, you will get the 18 million shillings which you charged, 18 million shillings. You remove the other 14.4 you spent when you are buying raw materials, 14.4 million. Second 4 million. So that difference is now 3.6 million. So now that 3.6 million, you will pay to URA. You make that payment. If it is the other way around, that you bought more raw materials, you bought more raw materials of, say, 100 million, and then you made sales of only 80 million, which can happen. The difference now, the other 3.6 difference becomes what we call a credit to you. It is a credit. It means you claim it in the next month as an input. So meaning in the next month, whatever purchases you make, you will add that 3.6 to the purchases, because what happens is whenever you purchase, you pay tax. So as a manufacturer, that's something you need to note. Then, yes, he mentioned an issue to do with if someone has no tin and you're buying from someone. It's a very good question. And you know what happens is with implementation of IFRIS, there's a lot of back and forth. I had a client, a petrol station, and the good thing, we would have frequent meetings with them, because by the way, what you need to know is URA people, they're actually your friends. I know the implication, they want money, but if you actually engage them and you explain your case, you'd be surprised at how they respond to actually assist. So what happens is the different groups, like she mentioned, the travel people who are into travel and ticketing, people can actually organize yourselves and have a meeting and go to URA. When we were the people of the fuel stations who were meeting, having regular meetings with URA, saying these are our particular challenges. This is what's making us fail to use the IFRIS. Then also you have, I think it was last 2 weeks or 2 months, a month ago, I saw the people who are into car importation also had a meeting with URA. So please do not think you cannot engage them. No, you can engage them, you know, and talk about the uniqueness of your particular business. But as it is now, if this is a bit robotic, no, you can't claim that input. You cannot claim that input when you're filing your VAT. You could only claim it at the end of the year in your sales, in your as expenses in your final return, but you cannot claim it in terms of VAT. So that's something you need to work around. Let me give you an example. I have a client, several clients who have the same issue. They're into bidding. They bid, and then they supply. Okay, what happens is that this particular client was supplying government, and they were not yet on the VAT register. So what happens is URA made what we call a forced amendment. Forced amendment means they look at your volumes and by force they put you on the register. That's another way to get there. So they force your tin, they put the VAT component onto your tin. So therefore you're supposed to charge it. But the problem was that by the time they put them on the register, they had already negotiated the contract with URA. With the government. So now they could not turn around. First of all, they must add 18%. They must issue the receipt and invoice when they are making the sale. 2, they must add the VAT. They cannot change the price they negotiated with the final with the person they're selling to. So it is within you now at that point to decide and say, okay, you need to look for someone who actually has a supplier who is on the VAT register. You need to get a supplier who is on the VAT register. And you see, by you, Yoram, being forced to look for such a supplier, you are helping with the implementation, and that's the ripple effect of IFRIS. That's how they are getting people on board, because you don't want to lose business, so you're going to get on board because you don't want to lose business. So on this one, you answer your question, you cannot claim those purchases in your VAT, your monthly return, because they were not fiscalized. But you could claim them at the end of the year in your final as expenses, provided you have receipting and you can prove it. You can prove it. In the event that you're engaged by your office or your tax office, you can prove and say, no, this is what I spend, this is what I do. So please, if you find yourself in a situation where you feel it's unfair to you, please reach out to URA. Please reach out. They have you can call. I'm available to answer some questions. But in the event that I'm not, you could still get in touch with URA, because they have a full team, customer care team, and they're actually very quick. They respond quickly, by the way. They're actually very quick. You will be surprised. So yeah, so the other thing you could do, Yoram, is to encourage your suppliers to get tin numbers. Tins. You encourage your suppliers to get tins and start giving you at least e-receipts, because there you'll be able to be on a safer side. Service industry, the other question was about service industry. I suggest you gather your unique issues and you can try to set up, if you have like an association, you try to set up a meeting and with URA and they will listen to your concerns. And you say this, you've said government, you're saying we implement this, but these are our unique challenges. And then you present to them and then have that discussion. You'd rather engage them than wait for them to come as enforcers. Rather engage them. Yeah. For example, I have this particular client who, yes, they fall within that category of over 2 billion per year, making about 8 billion. But the uniqueness of, I mean, by the uniqueness of the circumstance is that this 8 billion can be only one client. So they're saying, why are you forcing me to system integrate? And yet, this 8 billion I'm making is just from one client. See, so under such circumstances, you can actually engage them, and you have that discussion. You can write to the station head, and see and get the feedback, and then have that engagement with them. They are there to help you really. So you'd rather engage proactively than wait for them to come for you or hide. Yeah. So travel industry, organize a meeting. Dennis saying they are spying on you. Well, that's interesting. So, I mean, I want you to look at it this way. I want you to look at it this way. As a taxman, you're under pressure to raise money, isn't it? And as a taxman, you cannot be everywhere at the same time. So right now, the way the system is designed is that it relies on you, the business person, to give them information. So the information they use is solely coming from you. So yes, you're right. IFRIS, they are able to track your activities better. They're able to track your activities better. Yeah, but like I said, at the end of the day, you know your business because you set the price of your product. You know where you buy your raw materials from. So really, it's something you sit down. Maybe we could have a chat and see how we can organize for you, how we can structure. Yeah. So Ronald, I think I've finished those questions. You could have more.
Yeah, thanks a lot. I think we just have enough time for just one more round. There are a couple of questions which I will read out here. Yeah, I think we have Robert Biawashija, who is saying, I have generated invoices for clients who are not paying cash. I've been generating invoices for clients who have not been paying cash. What is that? What is that term, that how should I handle it? I think this is Robert asks for many of us who you have issued. URA is claiming, but you haven't yet even gotten paid by the customer. I think it's an important question.
Very important.
Rosemary is saying clients are requesting e-receipts and they want e-invoices, and yet I am under the threshold. How best do you advise me to proceed? That's from Rosemary. There is Kawoya David, who is saying, can e-receipts be used as an input when it is not an e-tax invoice? That I think you have addressed, but possibly you can re-emphasize it. Robert again is saying, kindly guide us on who purchase agricultural products from farmers who have no idea about IFRIS or VAT, but require cash at hand and even cannot issue a receipt when supplying goods. As in, I do know Robert is in the tea business. He goes to the farmers, buys tea, and after that, they are not giving him any, and that could be ginger, that could be any other product. How does he approach that? Jenny is saying, how do I issue an IFRIS invoice and separate the figures such that the expenses which we do not charge VAT on are also reflected, e.g. professional fees. So I mean, you issue an invoice where some expenses you charge VAT on, things like reimbursement. So the professional fees may have VAT, but the reimbursements don't. How do I issue that invoice? You could touch on that. James Bamumba is saying, how do I cancel an e-receipt after issuing it? Good question. I sent it out, but possibly the person rejects it or something. How do I cancel it? Wants an amendment. And lastly, Phil Mono is saying, if any of you needs a system-to-system integration, I'm your guy. Phil, thanks for that. So if Phil can help you, he has put his contact in there. He can help you if you want system-to-system integration. Yes, I think Fortune, we are just running over our time, but I'll give you 5 minutes to quickly answer those, and then we can wrap this up. Clearly, what is coming out is this is a conversation we need more time at doing, and that's something which we'll create. But for now, just quickly answer those questions.
Okay, thank you very much. Rejecting e-receipts or e-invoices. I don't know how you mean. Are they the clients rejecting them, or I didn't get what you mean by that.
I think if you want to cut the clients want an e-invoice, not an e-receipt.
Oh.
I imagine they are not beyond the threshold at that point.
Okay. So Rose, you need to have a discussion with your client and say, look, I've seen that before. You tell them, look, I'm not on the threshold. I can therefore not charge you VAT. But I can charge you the price minus VAT. That means you if they agree, now that's a discussion you have, you and your client, if they agree. If not, you would seek to apply. That's if you find yourself in that business where you honestly need to start issuing invoices, you need to apply. Go ahead and apply, make the amendment and see. I could help you with that. Just get in touch after. Then e-receipts used as input. Now, because the reason they cannot be used is because VAT was not charged to you. An e-receipt means that the money they've charged you is the actual money for the business. An invoice means that the money they've charged you also has VAT in it. So the fact that it's an e-receipt, it cannot be used, you cannot claim it as input. Just wait to the end of the year to claim it as an expense in your final return, but not, you can't use that as input, it's not allowed. Because either way, they did not charge you VAT, it was an e-receipt. So then how do I separate expenses? Oh, that's professional fees. Now, this one, the answer is in coding, configuration. You need to take your time. I suggest you need to take your time and look for the particular, like you're saying, something to do with, you want to have one invoice, but some of the items have VAT, others do not. So that one goes into coding. Remember, when you're going to issue, you issue what you have coded. So you need to now get codes for those. I'll give an example. There's a I think a petrol station where you would have an invoice. You want to issue an invoice, and it has service of a car. There's bought these 3 lubricants, bought this, and then there's the 15K for the guy who did what? Who did the actual work. So that's what you have to code. You code and put that, look for that individual code, which does not have that component. So that when you issue it out, you just keep adding, you issue one invoice, but with a different component. So the answer is in the coding, the configuration. Then another good question, finally, how do I cancel e-receipt and invoice? Now, that goes to what is called credit notes. Before, I would just issue a credit note, pass out to Ronald and say, Ronald, change this. Let's imagine I invoiced Ronald and I overcharged him. He said, no, cut this. So I would issue a credit note and then he would just accept it. But now those were being abused. So there was a change that now it has to be approved at URA. So that means you have to apply, the process you apply within your team, and so there is where you issue a credit note, and then when you apply for a credit note, it has to be approved now by the station head. So you need to prove URA now that you have to explain. It's not just a matter of canceling now. So it's a process. That's why please be careful. Please be careful before you issue, because once it goes, getting it reversed is not impossible, but it's cumbersome. Yes, Ronald, thank you.
All right, great. Thanks a lot once again. This clearly just points to the fact that we all need to, this conversation is one which we have honestly not completed. It is still a big conversation. Thanks a lot, Fortune, for opening our eyes. I get the feeling from the comments that there are more questions than answers which are out there. I guess what from the programming perspective at Enterprise Uganda, I think we are going to just kind of instill just a tax series where we can converse on various things. I mean, VAT, Ifris, all those are kind of full topics in themselves. And it's important for us as business people to understand them. So that certainly is something which we are going to do. I want to thank all of you who joined us today. I want to apologize to those who joined us earlier. We had a bit of trouble with hackers who had joined our meeting, and we are very sorry for that. But we are trying to make sure we rectify it in the next couple of sessions which we are going to have. But we also want to say thank you for taking off time on this Heroes Day to join the session, to be able to learn together. We wish all of you a happy Heroes Day. And I want to say a big thank you to each and every one of you for constantly joining the people who are on the session after session. We are very glad that you're part of us. Our request for you who want to have a business health check, if you want someone, a business consultant, to visit your business, ask a couple of questions, possibly use him as to brainstorm on a couple of things you're doing. That's a service which we offer at Enterprise Uganda. So please do come out and I just send your request. I'll ask Derek, you can just share the link in there in the chat box so that we can be able to capture that link, that request, and we can be able to grow. Once again, a big thank you, Fortune. Thanks a lot. Just send out a clap for Fortune for the time you have shared. We are very excited about the work which you are doing as a tax consultant. It's a topic which is often kind of covered in a bit of a shade of gray. Every time tax is talked about, it really stirs a lot of emotions. But what do we know? We know that tax is part of every business, and if it's done well, it can even be an enabler. I think there's something which Fortune mentioned, which I thought was very powerful, that the IFRIS in itself is causing compliance even at lower levels. So if the person who has been supplying you your inputs is not tax registered, you are the one who is going to actually tell him that you need to get tax registered so that we can get into business. Now, this is a deliberate strategy by URA and government. But what we need to notice is that that actually might give a competitive edge to the people who are compliant, because the people who are not compliant will not be able to do business with government, will not be able to do business with corporate organizations. So that is something which I think is looking in the right direction. So friends, we will continue having sessions. I encourage all of you to continue engaging. Next Thursday, we will be hosting a Kenyan entrepreneur who is a proprietor of shoemaking, running shoes in a company called Enda. I encourage you to join that session. It's going to be a session where we engage with an entrepreneur across the borders who is in an industry where they're trying to compete with the likes of Adidas, the likes of Puma, to make shoes, running shoes here in Africa. And we'll be hosting her. She's called Navalio, and she'll be with us next. We'll send out the link. All of you have given us your contact. You will be able to send you an invite. Once again, a big thank you. Have a lovely rest of the holiday. I know that some of you may be at home, some of you may be at your businesses, but a big thank you. Fortune will share with us the presentation. We will forward it to you in the email which will follow. A big thank you once again for joining. We are always honored as Enterprise Uganda. We are here to make sure our businesses grow to those businesses which create jobs and solve the big challenges of our country. So thank you so much. Have a lovely week and have a blessed rest of the week. We'll keep the meeting open for about 5 minutes to allow people who are just who want to share some information to be able to share it, and then we'll be able to close it at that point. Thank you so much and have a lovely week.
Shalom, shalom.